What is up, guys, and welcome to another edition of the Market Marauder Show, being the market one trade at a time. Hope everyone's having a great week out there, able to lock in some profits. All right, so today's episode going to be talking about the pre-week watch list. All right, so there's a lot of movement that's going on in the market. Going to be talking about some of the earnings that are coming up. Also, going to be talking about some of the top stories that I think everyone should be focusing on in the market as a whole. So let's jump into it. So first, I want to talk about all the stocks that are having earnings. It is the beginning of earnings week, so there'll be a lot of major earnings coming in this week. On Monday, we have KO, which is Coca-Cola. Uh, that'll be one of the earnings that I'll be watching. Tuesday, we have a lot of names. We have UPS, Verizon, General Motors, McDonald's, General Electric, Spotify, Pepsi, JetBlue, and Raytheon. And then on Wednesday, for earnings, we'll have Boeing, Hilton, and Meta. Meta and Boeing will probably be the two big earnings on Wednesday. Thursday, we have even more earnings, which will be American Airlines, Intel, Crocs, Snap, Caterpillar, MasterCard, Amazon, Eli Lilly, and Domino's Pizza. And then lastly, on Friday, we have some oil companies, which will be ExxonMobil, Chevron, as well as Clorox or Colgate. So Colgate will be giving their earnings on Friday as well. So let's jump into some of the top stories that kind of came out sort of this weekend, end of last week, or Friday of last week, that I'll be following as well. One of them is about Cathy Woods. So Cathy Woods, who owns ARK Investments, said they're going to be buying $42 million worth of Tesla. She predicts 111,000% rise in the company. So Cathy Woods was kind of like one of the major bulls when Tesla jumped up and had its initial rally before its two stock splits. And so she's kind of one of the longtime bulls of Tesla. She's kind of back in the news again, forecasting that the electric vehicle company will surge to more than a $6 trillion valuation over the next 4 years. On the same day, its stock tanked 10%. And so her firm disclosed that they bought 219,810 shares of Tesla in its flagship ARK Innovation ETF, and another 36,213 shares of Tesla in its next generation internet ETF, which is roughly about 41.7 million buy up using Tesla's $163 closing price Thursday, when the stock split 9.8%. And the company lost $51 billion in market value as investors reacted sharply to Tesla's shrinking profit margin. So she essentially bought the dip when Tesla fell down. So staunch and longtime Tesla bull Woods and ARK also released their projections for the automaker's future stock performance on Thursday, offering up quite a large valuation. So ARK set a $2,000 base case scenario for Tesla's share price in 2027, and 11-fold increase, setting its bearish forecast to about $1,400 a share, and a bullish at 2,500, which is 8-fold and 14-fold respectively jumps. At $2,000 per share, Tesla would have a market capitalization of 6.3 trillion, roughly the market cap of the world's three most valuable companies, Apple, Microsoft, and Saudi Aramco combined. Driving ARK's lofty expectations for Tesla were its forecast for the company's robotaxi and driverless ride-hailing segment, projecting a $200 billion in 2027 revenue from a unit in bearish scenario, a $613 billion in a bullish case, and seemingly tall ask for the division, and currently bringing in no revenue. So it's definitely interesting. She's weighing a lot of information, or weighing pretty heavily on the fact that the robotaxi situation is something that a lot of customers are going to be taking advantage of. Essentially, you could have a Tesla vehicle and it could be going around and doing like Uber and Lyft while you're not using the vehicle. and then you could be making passive income on the side, or you just have a taxi company, which is all Tesla fleets, and then the cars themselves would be the vehicles. You don't have to pay for drivers, and you can just have the company like Uber itself have the robo taxis that'll go and pick up different people based on the vehicle itself. So fully autonomous driving situation, which I think is kind of a huge ask. Not saying that Tesla doesn't have the resources or know the technology to do that, but it's just kind of a long projection. So it's going to be interesting to see how the market reacts to that and what people are kind of forecasting themselves. Are people aligned with Cathy Woods' projection of this, or are they kind of on the sideline, like maybe this is not something that's achievable by 2027, maybe along the lines of 2030, giving it 3 more years. But I think it's not far-fetched to see something like this kind of shaping up. And it definitely is something that, die-hard Cathy Woods fans or ARK Invest fans kind of could stand behind. Next, we have Bed Bath & Beyond. So on Sunday, Bed Bath & Beyond filed for bankruptcy protection after failed efforts to turn around the company. So on Sunday, Bed Bath & Beyond filed for Chapter 11 bankruptcy protection after it failed on several last-ditch efforts to raise enough money to keep the company alive. The home goods retailer has been warning of potential bankruptcy since early January when it issued a going concern notice that it may not have the cash to cover expenses after this dismal holiday season. Shares of the company closed at 29 cents on Friday, giving it a market value of $136.9 million. The stock is down about 88% this year. Last April, it was trading for around $20 a share. The company's 360 namesake stores and 120 BBBY Baby locations will remain open for the time being as it begins to close the businesses and liquidate assets. But it has filed motions in New Jersey bankruptcy court asking permission to auction the 2 brands, and the company said in a release it has already committed to closing all of its hair and face value stores. As of late November, Bed Bath had about $4.4 billion in assets and about $5.2 billion in debts. Court filings showed, alongside a long list of creditors, including vendors like Pinterest, Keurig, and Blue Yonder. It owes the most to BNY Mellon at $1.18 billion. The document shows, and it has between 25,000 and 50,000 total creditors, and employs about 14,000 non-seasonal workers, the court filing said. So definitely very interesting for Bed Bath & Beyond. It's been, quite a downward spiral for them ever since they first released that information. They've struggled, shuffling through leadership throughout the years, trying to find different people, different CEOs, coming back and forth, changing management, trying to get more funding, basically trying everything they could to keep the company afloat. But it seems that it hasn't really worked, for the retailer themselves. Closing, a large portion of their stores, closing all of their stores is ultimately what it turned out to be. Next, as far as the line of bankruptcies are concerned, another company, David's Bridal, is also filing for bankruptcy. It's the largest wedding gown retailer in North America. They filed for bankruptcy on Monday. David Bridal said in a statement that it would fulfill all customer orders without disruption or delay, but might be forced to wind down its operation if it cannot find a buyer. The company, which previously went bankrupt in 2018, said its business has suffered in recent years due to the pandemic, decreasing demand for wedding dresses, and high inflation. The CEO, James Marcum, said, "We are determined to stay focused in our future because we believe we have an important role in ensuring that every bride, no matter her budget, can have a perfect dress." The Pennsylvania-based David Bridal has 294 stores and 10,000 employees offering wedding dresses for as low as $199, according to court documents filed in the New Jersey bankrupt court. The privately owned company on Friday sent notices under the WARN Act, federal law that requires businesses with 100 or more employees to provide a 60-day notice before engaging in massive layoffs, saying it intended to lay off more than 9,000 employees by August. So definitely very interesting for the company itself. About 25% of brides in the U.S. wear David Bridal's gowns and weddings at their weddings, and David Bridal decreased or dress has made about 70,000 dresses over its 70-year history. The company has 256.9 million in debt and is engaged in consulting to coordinate the store's closings if necessary. The company's previous bankruptcy allowed it to cut 434 million in debt, but the pandemic and temporary ban on in-person events hurt the company nearly as soon as it emerged from Chapter 11, according to court documents. So definitely not been the best time for David Bridal's business model, especially not having in-person weddings. People, not really having weddings or buying wedding dresses, just going to courthouses. And the pandemic, people not booking venues because they weren't allowed to, kind of changed the wedding industry in general. So, I feel like that's kind of the same sentiment for Bed Bath & Beyond. They were kind of a niche sort of branded company. Them trying to restructure and find ways to, boost the brand, but they kind of thrived mainly on people having in-person experience at their store. So hopefully, we'll get more updates on the David Bridal situation, but it seems like this is basically the end for Bed Bath & Beyond. They were significantly closing their stores, but also with David Bridal, laying off 9,000 of their 10,000 employees, only leaves 1,000 left. So, definitely going to be seeing what the company is doing overall after, the bridal industry has kind of gone downhill from here. So let's jump into some of the stocks that I'm going to be looking at price-wise. The first one is ticker sign SPOT for Spotify. Spotify is currently at $133.76 at the time of recording this. They had a high where they jumped up to $134.77. Like I said, they do have an earnings next week. They are bullish at the current moment. The moving average 10 is above the 50 and 100. The moving average 100 is currently at $133.57, and the moving average 50 is currently at $133.07. So a range that I have for them, top end is going to be 134.77, low end is going to be 131.56. So those are going to be the key levels that I'm looking at for the company overall. And I think, Spotify has done a lot of things restructuring wise that I think will help the company overall. Last earnings, I think, was a beat. So they went up about 15% after that earnings went. And I think this one will probably be a beat as well. So we'll see if they'll hit that 134.77 level as the company continues on this bullish upward trend. Bear in mind, the prices, depending on when you watch this or listen to this, may be different. So make sure you do your own due diligence. Also, bear in mind, it's not financial advice. I'm not telling you to invest or not to invest into any of the plays that are currently in the market, just telling you what I will be looking at as the market continues to change. Next, we have Meta. Meta is definitely going to be a big one as well. I always am going to be looking at Meta just because if you look at a lot of these big ETFs, Meta is a large portion of their portfolio. So they have a lot of institutional investors who buy Meta or buy the dip on Meta. Also, a big key metric for Meta, in my personal opinion, will be the data as far as the amount of users as well as the ad revenue that they get. So if they're increasing ad revenue overall, I think they're going to be making a lot more money. And ad revenue is kind of how they really have thrived as a company for so many years. So Meta, ticker sign META, which was previously Facebook, a high-end level for them as earnings continue or getting close to their earnings is $222.11. Low end is going to be $209.76. So they're currently at $212.89 at the time of recording this. And they are bearish. The moving average 10 is below the moving average 100. And the moving average 100 is at 212.71. The moving average 50 is at 212.58. So they're kind of right in between each other around price wise. But going to be looking to see how it performs. Actually, I take that back. They are bullish. Moving average 100 is below moving average 10, but going to be looking to see that 212.71 and 212.58 as the two levels to see if it'll bounce off that 212.58 or if it'll bounce off the 212.71, currently being at 212.89. So still the ultimate range that I'll be looking at the stock overall is going to be, let's zoom all the way out on this chart. It's going to be 222.11 with a low end of 209.76. Like I said, I think this is going to be a bullish kind of release for the company overall. I think their ad revenue is going to show that they have quite a bit of financial backing behind them. So 222.11 is going to be my high end bullish level, and then 209.76 is going to be my low end level. Next, we have AAL, which is American Airlines. American Airlines reports their earnings next week as well. They currently, at the time of recording this, are at, let's see what level American Airlines is at. So American Airlines is currently at $13.40 at the time of recording this. So a key level I'm going to be looking at for American Airlines as the week continues on is going to be the $16 level. So with them being at $13.40, well, I'll take that back. With them being at $13.40, going to be looking at $13.70. So $13.70 is going to be the key level I'm looking at for them to see if they can hit that level. That's kind of a resistance level for them, is this $13.70, kind of a high-end resistance level. A low is going to be this $13 level. So high-end range is going to be $13.70. Low end is going to be $13.13. They're currently at $13.40. Now, at the time of recording this, they are bullish. This $13.40 level is above the moving average 50 and 100. Moving average 100 is at $13.35, and moving average 50 is at $13.34. So they have a nice little ramp. They bounced off of this moving average 50 kind of towards the end of trading and shot up to this $13.40 level. But going to be looking to see if they can break through this high-end resistance of $13.70 when they report their earnings. Next, we have Croc. Croc's ticker sign CROX is going to be the next play that I'm going to be looking at. They currently are at 147.18 at the time of recording this. High-end level, going to be looking to see if they can retest this 148.18 level. So basically a dollar above. Then from there, going to be looking at 150. So 150 is going to be the high-end range for Crocs. Crocs does move quite significantly. Probably around the 6th of April, they started this bullish upward trend. They were at 119.61, and they've been bullish ever since, hitting this 147.18 level where they currently are at, and going to be testing 148.18. Going to be looking to see if they can test 150 as a high-end bullish level. If not, if they start going back down, potentially seeing if they'll hit this 119.61 level as a low. So key target price, I'm going to be looking at them. I think Croc's going to have a bullish release when they come out with their earnings, and they're going to be looking at them at 150 is going to be my target price for Crocs. Next, we have Amazon. Amazon has their earnings as well next week. They had a low end kind of towards the middle of March of $88.12. Then they had a new bottom resistance level of $97.71. And then they kind of made another bottom at 101.46. So they're just making higher lows. Then another one at 103.04. They're currently at 106.96 at the time of recording this. What I'm going to be looking at them when they get close to their earnings is a 110 level. 110 is going to be my target price for them. I think ultimately the retail sector is good for Amazon. There's so many things Amazon is doing e-commerce wise, building their brand, building their business. There were also rumors about Amazon potentially buying AMC. Maybe there'll be some hints or confirmation that that's going to be a thing. I think that'll help AMC as well if that is true. but hopefully that'll be released with this financial information. Amazon never confirmed nor denied that they were pursuing purchasing AMC, but with Amazon owning MGM themselves, that'll be something that can definitely help them get their movies and get their Amazon movies into theaters so people can see them. They make quite a large amount of movies themselves, but that will help get them into theaters and would also help the movie company that they bought themselves get into theaters. So I think it will kind of be a win-win for Amazon purchasing AMC. I think it'll help AMC as well. AMC has a large following in the stock community, so I think people will rally around that, and Amazon has the customer base. So I think it'll be a great collaboration between the two companies. Currently, Amazon's at 106.96. Going to be looking to see if it'll hit that 110 level. Next, we have Snap. Snap has earnings next week. They're currently at $10.01. If Snap continues to go bullish, I'm going to be looking to see if it could hit this resistance level of $11.40. They're currently bearish at the time of recording this, hitting a low of $9.98, then bouncing off and going to $10.01. So Snapchat just recently released their AI bot. So if you have Snapchat, they'll have an AI function on there. I think there's some bugs and kinks they need to work out with that, with some data issues, some data breaching issues. But ultimately, I don't think it's going to be a bullish release. I think it's going to continue to go down. Price level I'm going to be looking at this is probably going to be around $8 to see if it'll continue to go down. So that's going to be my target price for a Snap. It's going to be around $8 after their earnings, currently at $10.01. I really don't think that the AI portion that they released is too helpful for Snap overall. Not saying it's a bad app, just not really understanding how it fits into their economy and their customer base. AI doesn't really seem like something that customers who use Snapchat really needed. Maybe, if it could help with the creative aspect, but ultimately I want to see something that can help boost Snapchat's ad revenue. That would be something, that would bring more money to them, sort of like them partnering with Ray-Bans to make the Ray-Bans version that recorded the different information. That was something that I was very interested in. They had different devices that could record. They had like a small little handheld drone that could record. Those are things that I'm kind of interested to see, partnerships with Snapchat, getting different users to have different user experiences to bring ad revenue in. That would be something that I would like to see Snapchat doing. Potentially having Snapchat do small segments for podcasters, getting into the podcast space. I think that would be more beneficial for Snapchat than to getting into the AI space. But ultimately, we'll see what they're up to when they have their earnings. Last one I want to talk about is ticker sign QS, which is for QuantumScape Corporation. They are a U.S. battery manufacturer. They make EV batteries. And with all the tax credits that are coming out for American-made EV battery manufacturers, I think QuantumScape may be the shock of the week, in my personal opinion. They had a low of $7.76. They're only at $7.45 at the time recording this. They're currently bearish. Target price I have for QuantumScape is going to be $8.15. If they're showing crazy numbers for getting a lot of this battery EV tax credit money, or have that on their balance book as proposed, I think this thing could shoot up way past $8.15. But going to be interested to see how the EV tax credit portion for them being a battery manufacturer could help the company overall, and what their strategy is to implement their batteries into different EVs, and if they're partnering with big name companies like GM or Ford for their battery technology. Now, I think their battery technology is still in the development stages. It's still, fresh out there in the research stage, but what I've read so far, I think it's very interesting technology. You can charge your batteries faster. They have a longer lifespan compared to other EV charging batteries. Basically, on the material that they're using, it's kind of state of the art. So going to be seeing how they perform overall and what developments they have and how their balance sheet will continue to increase. Last quarter, they had a beat, and I'm hoping that this quarter that they do have a beat as well, especially if they have tax credit money on their books. So hopefully that information helped you all out, make a more informed decision. Make sure you drop a comment down below, like on whatever streaming platform that you are listening to this on. And good luck to everybody this week in trading, and I'll see you guys on the next one. Peace.